continue, guys. Okay. Next. You need to cover this. I explained what is meant by transfer under section 2 clause 47. What is transfer? Section 47 says what is not transfer. Not transfer means if you get any gift of the property or any asset from someone, that is not treated as transfer. Like that, there are so many things only for the benefit of old scheme. Please, this is the question normally they ask. Transfer made outside India of rupee denominated bonds of an Indian company. Whether this will be treated as transfer or not, they will ask for 1 marks. Okay. Second one, transfer of a capital asset under reverse mortgage. Shantmurthy sir, if you can throw a little on this reverse mortgage, since you were working in bank, you may be knowing better than me in this.
Sir, reverse mortgage is nothing but where a customer will offer his immovable property and receive money over a period of time till he is alive or after a specific period, and after his death, then the entire property will get transferred to the bank.
Is it applicable to only non-senior citizens or it is applicable to all?
I think it's applicable to all, sir, if I remember correctly.
But I think I read somewhere it is applicable to senior citizens.
I'm not very sure. I'll come back.
Even I'm not very sure. That's the reason why I'm checking with you, since you are well aware of this. Because you get question on that. Hence I am referring that.
You are correct, sir. It's available only for the senior citizens.
Why? You guys have heard that most of the children will leave the senior citizen. They will not be having money to carry out their life. For that very reason, the government has framed this kind of arrangements. Understanding, guys?
Yes, sir.
But whatever the amount received by the senior citizens, lump sum amount, that will not be taxable as capital gain in case of transfer of asset under reverse mortgage. Okay. Computation methodology. Short term, long term, both one and the same. There is no difference, except the word will get added to long term, indexed. In short term, it will not be there. That is the only difference, calculating the gain. When it comes to exemption, in long term, there are so many sections involved. In short term, only few. Why? To encourage the assessees to hold the asset for a longer tenure. That is the basic idea behind giving so much exemptions. Okay. Which is nothing but long-term sale consideration. Take the amount minus expenses. If you have incurred any expenditure for the purpose of transferring the asset, that expenses you can deduct. Whatever the balance you get, that will be treated as net consideration. From that net consideration, if you deduct index cost of acquisition and index cost of improvement, you will get long-term capital gain or long-term capital loss. Okay, from that, if you get the exemption, there are so many exemption sections are there from section 54. That is 54 series is the exemption section with respect to capital gains. Exemptions, from that, if you deduct that exemption, whatever the balance is there, that becomes your taxable capital gain. Okay, this is the methodology of calculating. The same way, index cost will not be there. Only the plain cost of acquisition, plain cost of improvement. It will be short-term capital gain or short-term capital loss, less exemption under section 54. There are few sections applicable. The resultant figure will be the short-term capital gain or short-term capital loss. Understood? For our exam, you need to remember few index. Okay, 2001, 2002 index will be 100. 2022, 23 indexation will be 331. These two indexation you should remember. The others, ideally it should be given in the paper. Even if they do not give these 2 years indexation, you need to remember this 100 and 331. Once I start solving the problem, I will tell you. Okay. These two index you need to remember. Cost of inflation index we say. Cost of inflation index we say this one. CII. 100 and 331. Please remember these two. Done?
Yes.
Expenses on transfer means any brokerage, advertisement if you are given, those are all incurred, those are all included in expenses on transfer. You advertise in the newspaper, plot of land is available for purchase, contact, you give the ad, 10,000 rupees they charge, you will give 10 days or 5 days ad. Whatever the advertisement amount you pay, that will be treated as expenses on transfer. For the purpose of transfer, you are incurring that advertisement, no? Hence it is taxable. See, cost of inflation index 2001 to 100. how to apply indexation and all? Please remember this. Indexation benefit is not available. Only few things you need to remember in this. Bonds and debentures. You need to remember. Slump sale. You need to remember that. You need to remember that. And 112A, where is it? They have not included that. Please write wherever you have space. Shares which are taxable under section 112A. For that also indexation benefit is not applicable. Apart from those three, I don't think you will get any other items or the capital asset. Normally you will get the problem, you may get problem on debenture, slum sale, high chances of getting the problem, and 112A what I told just now. On that, indexation benefit is not available. The other things, please glance through once. I will tell you while solving the problem what is meant by indexation, why we need to provide indexation. Okay, in that time you need to see whether any of these asset for which we are calculating the capital gain, if yes, on which indexation, even though if it is given in question paper, you should not take it into consideration. That is the main thing. Whatever they give in the question paper, you should not take. You have to analyze. How to analyze? You should keep it in mind for which asset the indexation is not available. It is clearly given. One thing is this one is very important. Second one, slump sale. This is also important. Third one, listed equity shares on which STT is paid both at the time of transfer and acquisition, which is taxable under section 112A, is very much important. Apart from that, please go through once all this list. Okay. This is the indexation table. Please write down somewhere what is the page number according to your book. You have to keep referring this indexation. Page number in your book, what is the page number? Please write somewhere. 257. Please write somewhere in the prominent place where you can easily refer that page number. I told you now, 2022-23 331, 22-23 331. This is important. If you guys have seen, it has been marked in bold. That means in this year, if you transfer any capital asset, if it is long term, you have to take this 331 on the numerator multiplied by cost of acquisition divided by denominator indexation is the year in which you became the owner. That indexation you need to consider in the denominator. Numerator 331 into cost of the asset divided by denominator indexation of the year in which you become the owner. If it is long term, then only indexation will come. If it is short term, no indexation. Please remember this point. Okay. Remind me after few problems this page number 295 as per my system. Okay. Please remind me this page number 295 where when there is a bonus shares comes, I want you to remind me the page number 295. We will solve the question on bonus shares also. Shall we start the problems? Any doubt? Whatever we have discussed so far?
No, sir.
Okay, see. On December 25th, 2021, please make it as 22. Wherever there is 21, make it as 22. Wherever there is a 22, make it as 23. 1 year after, because this material has been prepared previous year. Hence, they have taken the previous years. One year after the date you need to consider. Okay. On 25th December 2022, Mr. X sold 450 grams of gold. Gold is capital asset. Though it is movable personal effect, gold is covered in the definition of capital asset. 450 grams of gold, the sale consideration of which was 14,50,000. That means he sold 450 grams at rupees 14,50,000. He had acquired this gold on 20th August 2001. 20th August 2000. 20th August 2000. Let it be as it is, 2000 only. 20th August 2000 for rupees 4 lakh. 4 lakh. The fair market value of 500 grams of gold on 1st April 2001 was 3,40,000. For 500 grams, it was 3,40,000. How much it is for 450 grams? You need to ascertain. Okay, find out the amount of capital gain chargeable to tax for the assessment year 22-23. Okay, before I start, let me give you some basic. If you acquire any capital asset, I will write CA. Okay, if you acquire any capital asset before 1st April 2000, 1st April 2000, if you have acquired any capital asset prior to 1st April 2000, you have the option of adopting cost of acquisition or fair market value. You have the option. It is not the compulsory. You have the option to adopt whatever the purchase price you have paid or fair market value as on 1st April 2000. You can adopt any one as your cost of acquisition. Okay. Example, you acquired a land on 2nd June 1099. Okay. On this date, you acquired a land for rupees 5 lakhs. Fair market value as on 1st April 2000 was rupees scenarios. If your fair market value as on 1st April 2000, 1st April 2000, if it were 8 lakhs, will you adopt 5 lakhs or 8 lakh becomes the question. Okay. Before doing all these things, assume sale price, assume whatever the land it is in the question, you have sold it for 15 lakhs. Less, I'm just taking cost only. I'm not going to do indexation. If you adopt cost 5 lakhs purchase price, you will get 10 lakhs. If you adopt fair market value as on 1/4/2000, if it were 8 lakhs, how much gain you will get? 7 lakhs. Now tell me, which is advantageous for you? Is it to get the gain of 10 lakhs on which if you pay tax is more advantageous, or if you get gain of 7 lakhs on which if you pay tax is more advantageous to you? Which option is more advantageous to you in these two?
7 lakhs.
7 lakhs. Okay. The logic behind explaining this one, whenever there is a fair market value as on 1st April 2000, which is higher than your cost, you should always consider the fair market value as your cost of acquisition. If your fair market value is less than your cost of acquisition, you should take your cost of acquisition as cost of acquisition only. Do not consider fair market value. Now tell me, in this case, which one you will adopt as cost of acquisition in this case and in this case? If you have paid 5 lakhs on acquisition, which one you will adopt as cost of acquisition in these two cases?
So less cost.
No, more cost is always benefit. Less cost means you end up paying more tax. Will you happy to pay more tax to the government or less tax to the government?
Less tax.
Less tax. That means you have to adopt always higher cost. In this case, I will adopt 8 lakhs. In this case, I will adopt my purchase price 5 lakhs. Why? Fair market value is less than my purchase price. Okay. On this backdrop, here we need to ascertain the cost of acquisition first. Okay, see. He acquired on this date, 1st April 2001, this one. If you guys see, here mentioned previous year 2020, 2001-2, that means 1/4/2001. Okay, on 1/4/2001. Before this, he has acquired the asset, right? When he has acquired the asset, as on 1st April 2001, how much it was? For 500 grams, 3,40,000. Okay, 3,40,000 for 500 grams. Will you adopt this one or will you adopt this one as your cost of acquisition? Will you adopt 4 lakh or will you adopt 3 lakh 40? It will not be 3 lakh 40, even lesser than that. Why? Because they have given for 500 grams and we are selling 450 grams. Your fair market value is 3 lakh 40. Which one will you adopt? Is it 4 lakh you will adopt or 3 lakh 40 will you adopt?
4 lakh.
4 lakh. Okay, that means even if they give this one, it is of no use. 4 lakhs. Now for this you have to see whether it is short term or long term. When they are selling, the date of sale is 25th December 22. Always you should take the year of sale as 22 in this case, in this study material. Date of sale. From this date to this date, how many months are there? Approximately. I don't want exact month. Is it more than 36 months?
Yes, sir.
Then it will be long term. When it is long term, we have to say whether indexation is applicable. How to identify whether indexation is applicable or not? You have to remember this. You have to remember this. Whether have they mentioned gold in this list for which indexation benefit is not available? Have they mentioned gold here? Gold here, have they mentioned?
No, sir.
No, hence indexation is applicable. Okay, now see how to calculate sale consideration. What price you are selling? 14 lakhs 50,000. 14 lakh 50,000 less indexed cost of acquisition. See here, index cost of acquisition will be whatever the cost of acquisition multiplied by 331 divided by 100. Why 100? Because you have acquired the asset on 20th August 2000, which is prior to 1st April 21. When any asset has been acquired prior to 1st April 21, then indexation will always be 100. These two will not change if the asset is acquired prior to 1st April 21. These two will remain same. Only depending on the information, how much you have paid, which one you are adopting, that becomes changed. Okay. On this, we need to calculate index cost. Index cost becomes 13,24,000. What is the difference? Difference is 1,20,000, 26,000. That is long-term capital gain. Why they have got this one? Because indexation they have taken it as 317, because that is previous year. Previous year means 22-23 previous, 21-22 previous year. This one. For us, we need to take this. Understanding?
Yes, sir. Sir, one doubt.
Yeah.
If acquisition is before 1/4/2001, then the standard index is 100, sir. Am I right, sir?
Sorry, can you please come back?
Yes, sir. Sir, if the project is acquired before 1/4/2001, sir. April 2001.
If any capital asset has been acquired prior to 1/4/2001, then you can opt the fair market value as on 1/4/2001 or purchase price of the asset, whichever is beneficial. Normally, higher cost will be adopted as cost of acquisition. Whichever is higher, you can always take it. But we will not say whichever is higher, which is beneficial to the assessee, he can take that. Either the purchase cost or fair market value as on 1/4/2001. In that case, always while calculating capital gain, these two remain same. These two. These two remain same. Only the amount will change. Why? In this question it is 4 lakhs. In another question it can be 10 lakhs, 20 lakhs, 2 crores. Whatever it is, take that. Okay, assume that they have taken 317 now. 1,82,000, 1,82,000, 317 for the previous year they have to consider. Hence we need to consider 331 for our previous year. Okay, the same way, please remember, if any other asset is given, like furniture, land and building, shares, whatever the other asset, you have to calculate the capital gain like this. If it is long term, you have to do the index cost. If it is short term, directly 4 lakhs you need to deduct, depending on the period of holding. Understood? Any other asset. But when it comes to land and building, there are few things we need to learn. Okay, when it comes, I will tell you. This is debenture. Even though it is long term, do not consider indexation. Do not consider indexation. You want me to solve this one, or you can solve, because they will not consider indexation. See, only the cost of acquisition is taken. No indexation benefit is available as capital asset is debenture. Why? You guys have seen, even I told you, remember these. The first one itself is debenture, for which index benefit is not available. Okay, depending on the nature of capital asset, type of capital asset, you need to see whether indexation is available or not, depending on the period of holding also. Type and period of holding. See, I will solve only with respect to this land. Okay, the same way. Nisha transferred the following assets on 2/6/21, make it as 22. Determine capital gain for the assessment year 22-23, now 23-24 in our case. Assuming brokerage paid on transfer 2%. 2% brokerage has been paid on transfer of all these things. Okay. Particulars, cost, fair market value, sales value. Only with respect to land I am solving. Okay. The same logic applicable to goodwill and tenancy rights. Land acquired in 1976. Is it prior to 1/4/2001? Is it prior to 1/4/2001?
Yes, sir.
Yes. What is the cost? 25,000. Fair market value as on 1/4/2001 is 1 lakh. Which one you will adopt? 25,000 or 1 lakh? Will you adopt 25,000 or 1 lakh as your cost?
1 lakh.
1 lakh. Okay. See. Sale consideration. What is the sale consideration? 30 lakhs. Sales value is 30 lakhs. Less expenses on transfer. Brokerage I paid now 2% brokerage. That you need to consider. 2% on this. What is the net consideration? 30 lakhs minus 60,000, 2 lakh net consideration. Index cost. How much you need to adopt? 1 lakh. Same here. 1 lakh. Which is nothing but 26 lakhs. 9,000 is your capital gain. Here it could be different. Why? Because they would have taken 317. I will just take 317. We will see 26 lakh 23 will come. 26 lakh 23. 26 23. You should not take 317. You should take 331. 26 lakh 9,000 is your capital gain. Understood?
Yes, sir.
Now you start writing few things, because when it comes to immovable property and stamp duty value is also given, we need to do certain analysis also. Okay, right. In case of immovable property, in case of immovable property, in case of immovable property, next line, if stamp duty value is also given, if stamp duty value, within bracket write it in capital letter SDV, stamp duty value SDV. In case of immovable property, next line, if the stamp duty value is also given, check check whether the stamp duty value exceeds 110% of consideration. 110% of consideration. Next line, put small letter A. If yes, that means when you compare and you found out stamp duty value exceeds 110% of consideration, that is if yes, put hyphen, sale consideration will be stamp duty value. Sale consideration will be stamp duty value. consideration will be actual sale consideration itself. Sale consideration will be actual sale consideration. That means you should ignore stamp duty value. That is the meaning. Okay. See, that's the reason why I took land to explain this. That's the reason why I took land. See, if SPV 40 lakhs, 32 lakhs. If SDV, one situation 40 lakhs, another situation 32 lakhs. What is the full value of consideration we need to discuss? Okay, this will always be full value of consideration on the sale price only. We will calculate commission, brokerage. It will not have any bearing on the stamp duty value taken. It will always be calculated on the consideration. Consideration means actual consideration. This consideration may differ, but this will have to be calculated based on the actual consideration, how much you have received on the sale of immovable property. On that you have to calculate. This has no bearing with the whatever the consideration you consider. Okay, assume your stamp duty value is 40 lakhs in one case, 32 lakhs in another case. First you need to see whether this 40 lakhs is 110% of consideration. Consideration is this one, 110%. That means 33 lakhs. Is stamp duty value is more than this or less than this? Is stamp duty value is less than 110% of consideration or more than 110% of consideration?
More than 110%.
More than 110%. In that case, your consideration becomes 40 lakhs. Are you guys understanding? You have to consider stamp duty value as your sale consideration, that is deemed sale consideration. Are you guys able to understand why we have to take in that way? Tell me honestly, anyone who purchases the building or land, will everyone pay the white money? Will every buyer pays the white money?
Yes.
Then what happens? Actual consideration on the stamp paper, they will show less. They take the cash for the balance. Yes or no? Okay. To avoid or control of such kind of transactions, the government has bought this one. In this case, it is 40 lakhs. I have taken 40 lakhs. Now, second situation. If the stamp duty value is 3 lakhs, 32 lakhs, that means what is 110% of consideration? It comes to 33 lakhs. Is 32 lakhs is more or 32 lakhs is more? Out of these two, which is more? 110% of consideration is more than the stamp duty value. In that case, It will be actual sale consideration will be your full value of consideration. Are you guys understanding? Yes or no?
Yes, sir.
Okay. Next, with respect to immovable property only, because it has got so many things. Assume that you want to sell the land or building. Okay. You see the building or land, you will come to an agreement. This much I can pay or you can receive. Yes or no? How the transaction will happen when you want to purchase any land or building? Will you, without seeing the land and building, will you agree this much is the consideration I am going to pay? Will you agree on that? Or first you will see the land, then you do the negotiation, then you make the arrangement of money. After a few days you get registered in your name. Yes or no?
Yes, sir.
Okay. Because these are all practically happening, you have to understand. Assume that you agree for a consideration of 3 crores. Consideration of 3 crores. Okay. The date of agreement could be, I'm just taking some ad hoc date, 1st June 22. The date of registration, 3rd January 23. Because you might need some time to arrange the money also, no? Or these two dates are different or same? First thing. I'm just taking this one as 1st October 22. These two dates are different, right? Okay. On the date of agreement, you guys will sit at some known person or in the broker's place or in some hotel. You do the negotiations. Normally it happens in that way. Or in front of the site, you guys will negotiate. And the agent, if you have gone through agent will prepare a document in the sense agreement, on which you also sign, the seller will also sign, the what do you call, guarantor or what, who is that fellow, sakshi, witness will also sign. In that agreement you agree to pay 10% as advance. I'm just taking, it could be even 1 rupee also, it could be entire amount also. I'm just taking 10%. Then again, don't ask me, sir, if he has received only 200 rupees or 2000, 2 lakhs, will it have any bearing? Any amount, even full amount or any part of the consideration, if you have received on the date of agreement in specified modes means other than cash, other than cash. If you have received any advance amount of the consideration, in that case, you can adopt the stamp duty value on the date of agreement as your full value of consideration. Okay, tell me, from this date to this date, stamp duty value becomes lesser here or becomes higher in this date when compared to this date. Stamp duty value become higher or lesser in this date? This date. Which date? On the date of registration. Will this stamp duty value is lesser in this date or higher in this date? Think practically and tell. Nothing but government valuation. Will it be more or high in this date compared to this date?
It will be more, sir.
Always more. Why? Because the demand will be more, hence the stamp duty will also be more. Okay. If any advance is evidenced by any instrument could be debit card, credit card, check, account pay check, bank draft, whatever it is. If it is evidenced by any instrument, then the stamp duty value as on the date of agreement can be adopted as full value of consideration. If you have paid in cash, then the stamp duty value as on this date shall be adopted as full value of consideration. Understood?